Well, as a founder myself, it's really painful, when you have to sell part of the company to grow. I mean, the exchange, of course, you're selling part of the business to get funds and partners, that will make all that growth journey easier. But still, if you think about it, the average funding team has around 15% of the company at exit, right? That means that the other 85% is owned by somebody else, right?
That's huge. Wow.
Exactly. It's founders working 24/7, on a business for years, for 5, 7, 10 years. And then at the end, they only have 15%, right? So
yeah,
that's one data point. Like, dilution is super painful. And then two is, SaaS businesses are extremely predictable, right? So if you know, every dollar that you invest in growth, what that's going to turn into in terms of ARR and for how long, right? Then you can start to understand, hey, like, where can we find these funds, right? Like, does it always have to be VC money or not, right? So then that was another important thing. And then last of all is VC money. People tend to think that it's free, right? Like, when people compare, I'm going to use equity. Well, like, I mean, you're selling part of the business, but you're not paying an interest, right? So people think about it like, oh, wait, so I can use either equity money or I can use, non-dilutive capital, which has a cost, right? It has a cost, and it has a few percentage points, right? So people tend to think that it's free, but if you think about it, the cost of capital of equity is extremely high. Let's say that you sell 10% of your business for $1 million, right? So then you say, okay, so my business now is worth $10 million. Then a year from now, if you wanted to buy back that 10% of the business, how much would it cost you, right? Because if maybe the business is now worth
20 million. Yeah, you've just diluted by 1/10 right there. Yeah,
exactly. So if you were to buy back that 10%, it would cost you, if the company is worth
$10 million.
Yeah, exactly, right? So then the cost of capital, if you think about it, in this case, it's 1,000%. So then when you start thinking about cost of capital, about, so using equity to grow is going to cost me 1,000% cost of capital, right? And using CapChase is going to cost me like a couple of percentage points, a few percentage points. Then the cost of dilution becomes much easier to understand, right? It's not ownership, it's not loss of ownership only, but also, the financial cost of using that capital.